Mr. Guru, the alchemist, with us. A brief introduction. Mr. Guru is known as the alchemist in the trading circles. He is an entrepreneur running a BPO successfully. At the peak, he was employing more than 800 people in the BPO. He was initiated into trading in 1991 with a very famous broker. He was an authorized assistant there in 1991 and has been a very passionate trader. He has been in training students across the globe and has trained more than 3,000 people to date. His core competencies in technical analysis are Fibonacci series, Bollinger bands, Ichimoku, trend lines, and big data. And he is looking forward to pass on the best to each one of you. So my request will be to make use of the session and try to get as much knowledge from a willing guru as possible. So with this brief introduction, I welcome Mr. Guru and ask him to take over the screen from me. Over to you, Mr. Guru.
Good evening. Thanks for your nice, kind introduction, Sarji. So I request you to enable screen sharing for me. I hope I'm audible.
Loud and clear, loud and clear.
Yeah. So it says host has disabled participant screen sharing. So I request you to enable participant screen sharing. Yeah. I hope my screen is visible to all and I am audible to all, right?
Yes, go ahead.
Okay. To start with, let's have a minute of prayer that we get the best out of this training. Sadasiva Samarambam Sankaracharya Madhyamam Asmadacharya Paryandam Vande Guru Paramparam. Om. Happy New Year, one and all. Welcome to this session, Bollinger Band's high probability trade setups. I invariably start my trainings with this Guru Paramparam sloka. To succeed in markets, you need the discipline of a sannyasi. That is why, I invoke the blessings of Guru Parampara. Yeah. So I had been given 45 minutes to 50 minutes time for training you on Bollinger Bands. My training will be basic of Bollinger Bands, and you can have 15 to 20 minutes of question answer session at the end. First, let me start why Bollinger Bands. In markets, in technical analysis, you should learn only select few things to succeed. If you try to learn too many things, you'll get confused yourself. So first thing is annual volatility, then implied volatility. Third is VIX. Fourth is Bollinger Bands. Bollinger Bands are also called VIX bands, envelopes, volatility bands and all. Fibonacci, Ichimoku, price action, option Greeks, human psychology, pyramiding. Okay, these are all the things which you need to learn to succeed in markets. Anything else, is just an add-on. If you understand these things, you will succeed big time in the market. Okay. About Bollinger Bands. Bollinger Bands was invented by John Bollinger in 1980s. It has been followed by most retailers and big organizations also. Bollinger Bands also called, standard deviation 1, standard deviation 2. Okay, standard deviation 1 means 66% probability for success. Standard deviation 2 means 92% probability for success. So if you understand Bollinger Bands, standard deviation 1, you will get many trades. Out of 3 trades, you will succeed 2 trades. If you take standard deviation 2, out of 10 trades, you will succeed 8 plus even 9 trades. Okay, that is the basic definition of, taking Bollinger Bands for trading. Okay, so now we'll go into how do we trade Bollinger Bands. Let's create some rules. Okay, rules should be like this: identify, isolate, eliminate, trade, execute trade. Okay, identify a pattern. Okay, Bollinger Band pattern. Then isolate, screen it down, whatever you're going to get. Then out of that screening, eliminate false triggers. Okay, and then execute your trade. This should be your trade plan. Plan your trade, trade your plan. Okay. So the Bollinger Bands will look like this. From the basics, I'll add Bollinger Bands so that you have the basic idea of how to add Bollinger Bands. So first, I add price. So let me take whatever is running now. DAX should be running now. So I go for, say, 5 minutes. Then I add Bollinger Bands as overlay. So this is the Bollinger Band setup. As you see, the Bollinger Bands,
How do you know that?
the Bollinger Bands expand.
Yeah, namaste, sir.
I request people to mute themselves so that you do not disturb others. As a host, Sundar sir, maybe you can ask other to be muted.
Definitely. I am putting everybody on mute. And Guruji, if you see those, some extra lines which are coming,
Yeah.
what you can do is you can stop the screen sharing
Okay.
and start screen sharing again.
Okay.
So that they will disappear.
Yeah. I have done that, but it's not going. Stop. Yeah, it's gone. Okay, this is the Bollinger Bands. The Bollinger Bands are called envelopes also. Envelopes in the sense, if you take some 100 bars, 90 bars will be enveloped by the Bollinger Bands. Only 6 to 8 bars are outside the Bollinger Bands. Okay, so it's called envelopes. It's also called VIX bands. It measures the fear of people in the market. Okay, so if you understand these basic things, then the trading will become easy.
You are ready to share your screen.
Yeah. Yeah. So as you see, the Bollinger Bands.
You can share it now.
Yeah, I've shared it.
Once.
Are you able to see?
No, not yet.
Share screen. Shared. Now?
Yes. Yeah. Go ahead.
Okay. So now we know we have got this Bollinger Bands. So they are also called, envelopes, in the sense out of 100 bars, 90 to 92 bars will be within the Bollinger Bands. So they are always enveloped. So they are called envelopes also. They are called VIX bands also. They measure the fear of people in the market. So if you see, it has a pattern. It narrows down, squeezes down, then expands, then squeezes down, then expands. So expands, squeezes down, right? So lower wicks, here it is lower wicks, begets higher wicks. Higher wicks begets lower wicks. Then again lower wicks begets higher wicks. So it forms a nice sine wave pattern. Okay. So this is how the Bollinger band looks. Now I'll try to put across a simple explainer video by which you can understand Bollinger bands. Market is more about physics than anything else. Okay, so this is about a small physics explainer video on how to understand Bollinger bands. Let us say here the Bollinger band is squeezed. Okay, this A1 is the diameter. Okay, so let us say it is 12 inches. P1 is the pressure. V1 is the volume of liquid flowing through this tube. Now this tube is enjoined by another smaller tube. A2 is the width, new width. Here it is 12 inches. Let us say this 6 inches. Okay. So volume 2, as the liquid which starts here cannot escape anywhere, volume 2 will also be the same. Only thing is the pressure will increase here, dramatically increase here. So in the case of Nifty, let us imagine we have 1 crore volume. Okay, 1 crore volume when the VIX is expanded, right? Here it is 12 inches pipe, right? So VIX is expanded. So 12 crore volume, sorry, 1.2 crore volume of Nifty when the Bollinger band is expanded. Now the Bollinger band is squeezed, right? From this height, say, this is the height. So through which 1 crore volume of Nifty was passing. Now the height has reduced to 6 inches, right? So whereas the volume cannot escape anywhere. So here a great pressure is being developed, right? So once the water or the price, when it comes out of this squeezed area, it will blast through. We just need to understand which way it will go, whether it will go up or go down. So if you had watered plants in your garden, okay, with a hose has some pressure, you can water only up to 1 meter. If you want to water up to 3 meters, what you do? You just squeeze the tip of the hose and the water flows further, right? So it is a very common thing. So if you understand this basic explainer, then understanding Bollinger bands becomes easy. Okay. Now we see the Bollinger is expanded. Okay. The Bollinger band is expanded. Now it is squeezed. After the squeeze, how do we understand whether the market is going to go up or come down? So as I told, trade with principles. Okay. So not only rule based trading, then your trade becomes much easier. Okay. So I know the Bollinger band is expanded. Now we see NR14 pattern here, or even NR21, narrow range 21. So the Bollinger band squeezed. Now I want to understand, whether it is going to go up or go down. Okay. How do we do that? Big people trade only in 2 ways. Big organizations trade only in 2 ways. They don't have a third way to trade. First way is breakout, breakdown. Okay, whether the price is going to go up or go down. Both are called actually breakouts. So for simplicity, I'm making it as breakout or breakdown. Okay, so how do we define breakout? So we'll have 4 or 5 sets of rules and then we'll take trade. Now I'm here, so I have got a Lakshman Rekha. Okay. I draw it here. I draw it here. So it is squeezed. So the thumb rule for breakout is price going up, okay, or I'll just type it so people can note it down easily. One, price goes up. 2, upper Bollinger Band goes up. 3, middle Bollinger Band goes up. 4, lower Bollinger Band comes down. So this is the rule for breakout. Above is the rule for Bollinger Band breakout. It's a very simple. Okay, so if you see here, the price going up, rule number 1 satisfied. Upper Bollinger Band goes up. Upper Bollinger Band goes up. Rule number 2 satisfied. The middle Bollinger Band is not here, but even that will be going up. That is satisfied. 4, lower Bollinger Band comes down. Now it is called breakout. A simple, rule based trading. Now we have got here. So what we do is, market is running, right? So just draw a line here. So whenever you see, we can now trade even now with DAX, crude, gold, whatever instrument, it works perfectly. Now we are seeing breakout. Let us see breakdown. So here you see the VIX is, the Bollinger Band is expanded. After the expansion, it has squeezed, right? So now what we do is, we take Lakshman Rekha here, here, right? So at this place, lower Bollinger comes down, upper Bollinger goes up, price goes down, and you have got trigger till here. Usually the stop loss is middle Bollinger Band, but if you are taking a lower time frame, you can keep upper Bollinger Band also as the stop loss. So for breakdown, we look for the following conditions. One, price going down. 2, lower Bollinger Band going down. Middle Bollinger Band going down. 4, upper Bollinger Band goes up. So this is for breakdown. Very simple rule. You will succeed most of the times. You will have least stop loss to best return. If you see here, price still here. If you see here, upper Bollinger goes up, price goes up, lower Bollinger comes down, it's a breakout, right? Here, upper Bollinger goes up, lower Bollinger comes down, price comes down, it's a crash. Upper Bollinger goes up, lower Bollinger comes down, middle Bollinger goes up, price goes up. It's a very big upside, right? So you can, trade very simply without, depending on people, and make good money. This is about breakout and breakdown. Now we'll go into understanding what is mean reversion. Mean reversion usually, is a potential reversal zone trade where you get bigger returns. The breakdowns can be sometimes deceiving. You'll get stop losses hit also a few times. What you can do is, to add to these, breakout breakdown, you can add few more conditions. Okay, the conditions are for breakout. One, I look for TR greater than ATR. True range greater than average true range. This is the condition one. Okay. Then I look for upper Bollinger Band going up. Then 3, middle Bollinger Band going up. Then 4, lower Bollinger Band coming down. So this will, give you better control. I have a, AMI broker AFL file, which will give these kind of, inferences automatically. Let me just check if I have. Most of my trades are basis Bollinger Bands. I think it should be there. Okay. Okay, it's not there. Maybe I'll try to get it later. Okay. Now we'll have the chart. So this is about breakout and breakdown. So I'll take your questions, post this 45 minutes time. Now we'll go for, mean reversion. Mean reversion, I look for this Bollinger Band is here. So I draw Fibonacci levels. Say this is the bottom of Bollinger Band. From bottom to the top, I draw Fibonacci. Okay. Now, whenever the lower Bollinger Band hits 23.6, now it is hitting 23.6, right? At this place. So this is the line where the 23.6 hits, and then it has come up to 23.6. The price has crashed till 23.6, even 38.2, right? So it's a very small stop loss, and then you have got a very big correction up to 38.2. So even if you take the previous level here, so if you take one more level from here, this is the top, right? So I draw till here. Okay. So when the lower Bollinger Band hits 23.6, this is the level. The price has come down to 23.6 dot. Okay, so it can further go on to make flag Poland flag pattern, which it made, but still you will have one kind of pullback, and then it can further come down or it can go up further. Usually, when this lower Bollinger Band hits 23.6, okay, you see the price coming down very fast. Okay, this is about mean reversion. I'll give you few more examples of mean reversion. You'll be amazed with the kind of simplicity. Let us take Maruti and Nifty for reference purpose. I'm taking daily time frame. I don't know why it's not showing the full levels. Some issue with the tradingview.com. So I'm going for daily chart. I'm adding Bollinger Bands. So this has crashed from here to this place. Right? Maruti has crashed from 7,686 to somewhere around 4,627. Now, the upper Bollinger Band, he is hitting 38.2 at this place. And if you have taken this as the stop loss and gone long, it has returned up to 7,600 odd again. Right? It's a very, very, very simple, way to trade. You can take a higher time frame and then take a bigger position, longer position. So if you take from the very top, from here You are again taking, say, till here you are taking first fall, right, for Maruti. From 10,000 odd, it has come to 6,380, right? So when it crashes down, the upper Bollinger Band is hitting 23.6, right? Where it is hitting, this is the place where it is hitting 23.6, right? So your Lakshman Rekha for, longing stop loss is 0 level. Okay, and if it longed here from around 6,400 odd, it made a high of 7,856, right? That's a big money. Now we'll go to the next level to see what happened from the next crash. Now the, it corrected also from 6,380 to, let us remove this and draw it again. From here, top, let us take to the next crash, right? This is the level, right? We have drawn. You will be amazed. So I'm taking a vertical line. This is where the upper Bollinger Band is hitting 23.6, right? This is the 23.6 line, 0.236 line. So the upper Bollinger Band is in 23.6 here. So your Lakshman Rekha for longing stop loss is the 0 line. So it never breached here. So from the level of 5,350 to 5,400, it made a high of 7,756. It works exceptionally well for alpha stocks, indexes. Okay, so now we'll have one more look at Nifty. Nifty will be even amazing. Many times it, reverses from 38.2 itself for alpha stocks. So this is the bottom. So we are drawing Fibonacci from here to the top. This is the first level top, right? So if you are drawn here, the upper Bollinger Band is the stop loss reference, and then it crashed to 38.2. So if you are drawn up to here, so it is hitting 23.6 and there's a crash. It's a very big money whenever that hits 23.6. It's a humongous crash, right? This for the Nifty. So if you are having fear, you can sell Nifty and buy, near ITM call option to be on the safer side. You will make good money. If you take higher time frame and trade this, you may make money today or you will make money tomorrow. That's all. So this is about mean reversion, about Bollinger Bands. So this is the training part. If people have questions, I'm open to take questions.
Thank you, Mr. Guru. Now the floor is open for questions. First, I request people who are connected through Zoom to raise their hand, or they can also type it in the chat. There is a request for explaining mean reversion again, Mr. Guru.
Yeah. Mean reversion is, when, say, when the market is going up, okay, you want to know where you can short, okay. First, one most important thing about Bollinger Bands is it identifies bottom or the temporary bottom. It identifies the top or the temporary top. Okay. Now the Nifty is crashing. It made 7,511. You feel, it's a bottomless pit. It can touch, 4,000, 3,000. Many people were telling, GAN experts were telling 1,500 for Nifty, right? When the crash was happening. So how do we, understand if Nifty had made a bottom or a temporary bottom? Now that Bollinger Band flattens, tapers. Whenever the Bollinger Band tapers, that signifies bottom or the temporary bottom, top or the temporary top, right? So this is the first thumb rule. Okay. Now what I do is, for alpha stocks, I look for the crash is there. I look for, mean reversion where it can go up. Okay. I take Bollinger Bands. I draw from the top to bottom. Okay. Usually the alpha stocks bounce from 38.2. The upper Bollinger Band is hitting 38.2 here. Okay. If it had gone long here, it had made very big money. Say, imagine maybe to conceptualize, let me put it in a simpler way. Think of upper Bollinger Bands as the buyers, okay, bulls. The lower Bollinger Band as the sellers or the bears. Okay. Every day in Nifty, 1 crore 20 lakh volume is happening. 1 crore 20 lakh volume means 1 crore 20 lakh buyers and 1 crore 20 lakh sellers. Okay. If I buy Nifty one lot, I can't buy directly from you, right? So I need to buy through National Stock Exchange. Say if I buy it at 8,000, I need to pay 8,000 to 75 as margin money, or 60,000 as money to the National Stock Exchange. And if I sell to you, you will be buying through NSE from me, right? So you will also pay 60,000 margin money. So if the market goes up, I lose money and you gain money. The National Stock Exchange deducts money from my account and transfers to you with brokerage, right? They take brokerage from me and you. Okay. So every day 1 crore 20 lakh volume is happening. 1 crore 20 lakh volume means, the buyers are buying 1 crore 20 lakhs into 60,000. You and I will buy 1 lot, 2 lot, 3 lot, 10 lots, not more than that, right? So if the market has crashed from 12,431 to 7,511, and each day such a big volume is there, okay, people have lost some 3 lakh, 4 lakh crore, right? They have averaged. Whenever the upper Bollinger Band comes down, that means at every level they are buying and averaging their position. At 12,431 they bought, the Nifty crashed. 12,400 they bought, Nifty crashed. And not 1 or 2, 1 crore each day, right? And it has crashed up to 7,511. Now their average is at this 38.2, correct? So people will say this is a oversold level. Actually, this is not oversold level. This is a overbought level, right? These people have averaged from this place to this place. If you put yourself in the FIA shoes or the operator shoes, you have bought at 12,430, 12,400, 300, 200, 100. At every 100 points, you have bought 1 crore average. Your average has come down to 38.2, which is around 9,388, right? And from here it has to go up. That is the basic idea, mean reversion. So if you understand in this perspective, most of the times you will be making money. You can trade even in 5-minute charts. It will give you good return. It will give you least stop loss to best return. That is the idea.
Thank you, Mr. Guru. Next question is, do we need to use other indicators along with Bollinger Bands for better setup?
If you are good in Bollinger Bands itself is enough. Okay, what I do is I have TR, true range, average true range, VWAP, RSI as confirmations. My confirmations are 6/7 or 7/8. Like first condition is TR greater than ATR, true range greater than average true range. That is the first condition. The second condition is upper Bollinger Band goes up for breakout. Third condition is middle Bollinger Band goes up. Fourth condition is lower Bollinger Band come down. Fifth condition RSI goes up. Sixth condition is VWAP goes up. Then I am comfortable.
Okay.
So it's a rule-based trade.
Okay.
Yeah.
When do we look for upper Bollinger Band hitting 23.6 and lower Bollinger Band hitting 23.6?
Yeah. When the market is crashing, okay, you look for upper Bollinger Band hitting 23.6 or 38.2. For alpha stocks, it can be 38.2 also. Okay. For beta stocks, it can be 23.6, some cases even 11.44. For alpha stocks, 23.6. When the market goes up, when the market crashes down, it is 38.2. Okay. Vice versa for beta stocks. So in this case, I look for market reversal, right? Market to go up. So for market to go up, I look for upper Bollinger Band hitting 38.2 or 23.6. So when I look for the crash, okay, say imagine I just change the if I look for crash from bottom, I draw till the top here, right? At this place, the lower Bollinger Band is hitting 23.6, right? Here it did 20.6, correct? Just see, at this place, it hit 23.6, correct? The lower Bollinger Band hit 23.6. It made, this was the top. From there, it was a big crash. From around, what is the price? Yeah, 11,900, 12,000 odd to almost 11,300, right? This is the level, 800 points crash. Okay, again it is hitting 23.6 here. That's a 400 points crash, right? So this is how we trade. This for coming down, you draw from bottom to top. For going up, you draw from top to bottom.
Does this work for gold, silver, commodities also?
Anything that is traded widely. Even day for yesterday, I gave sell call for gold at 1964. Okay, it crashed to 1904. All instruments, it works. Say what you need to do is you need to create a Excel file like this and practice. Say this person he did some 60-70. A few people did 1,000 charts also. So this is how he does it. Okay, he takes random stocks. He doesn't know what is SPX, what is DJA, what is DAX and all. He took SPX, S&P, 8/5/2020, buy time, sell time, what is the buy price, gain points, what is the gain in rupees. Okay, then he takes the screenshot and pastes there. So this is the breakout, right? Upper Bollinger goes up, lower Bollinger comes down, correct? Middle Bollinger goes up, it's a breakout. So from here to here, sell. So that's how we had plotted. Almost, there are people who have done some 3,000, 4,000 charts. Different time frames, breakout, breakdown, mean reversion short, mean reversion long, like this he has done. So you need, a lot of effort. You can take any script and, do this exercise. Today you can do it, tonight you can do some 1,000 charts. It takes, 1 minute to create one chart. So 1,000 minutes to create 1,000 charts. That's all.
What is the suitable time frame for intraday trading?
15 minutes.
15-minute chart is ideal for intraday trading. Okay. Drawing the Fibonacci, which low and which high should we take?
You can take, some 100 periods. Whatever is available in the screen also you can take. Like, in this case, we take, say from here, this is the top, right? Initial top, correct? You can see 23.6 hitting here, right? The lower Bollinger Band, 23.6 hitting here. So from there, it crashed till here, 23.6, right? And if you taken till here, 23.6 is yet to come, but when it comes, it will, give you good money. It even works in 1 minute chart. Say there are a few tweaks which I have. What I do is I wait for the ATR to happen. Like, for Nifty, ATR is around 215 to 216 points. So I wait for ATR to happen, or 0.786 of the ATR to happen. And then at that place, if I see the mean reversion, then I take a long trade or a short trade, as the case may be. So we take Nifty, you can choose Nifty. So I wait for this, 23.6, right? Or to hit. If I shorted here, from here, it just came down to 11.44. Even that's the big money. It's a 1 minute chart. That's a 30-point fall, right? This is the place where it hit the 23.6, right? And then it immediately crashed by 30 points. 30 points is a good money. Yeah. Any other doubt? Most of my trades are basis Bollinger Bands, and people who follow me, vouch that I give the least stop loss to best kind of return calls.
Yeah. So I'll just read the next question in Zoom. If I'm selling Nifty 14,800 call, one lot, and Nifty 13,600 put, one lot, and I have a idea that Nifty might move up, and I buy one lot of 14,400 call, I can get margin benefit. After that, after execution of the trade, can I come out of the 14,400 call option, or will I get margin problem? It is a question related to margin, probably.
Yeah, it is not related to
Not
Bollinger
related
Bands.
to trading. Okay, we'll
Maybe.
go to the next question. One second. There is one in the YouTube. How to know whether it is a fake breakout or a breakdown? As many times we see upper and middle Bollinger move up and lower Bollinger go down, but after that Nifty or any other stock completely reverses.
Say, as I told, this is a probability, trade. So if you take standard deviation 2, most probably out of 10 trades, 8 to 9 trades, you will succeed. The breakouts, will give you good money. If you take higher time frame, you'll definitely succeed. Number of fakes will be less, and for the fakes, you have the least stop loss, right? So for that, you can add TR greater than ATR, RSI going up, VWAP going up. You can have, other confirmations. What you can also do is, for breakouts, once it has done ATR, don't go for breakouts, look for breakdowns. Like, Nifty has a ATR of 215 points. After 215 points, you see a breakout. Okay, then most probably that's a fake breakout, right? And if the Nifty has crashed by 250 points, okay, then the further breakdown may be a false breakdown. So, after Nifty crashes down by 215 points, don't look for breakdowns, look for mean reversion. And after the Nifty goes up by 215 points, don't look for breakouts, look for mean reversions on the downside. So these are all, probability mass functions which can use.
Can you draw any chart right now so that we get the live demo explained? It would be good if you try it on silver or gold.
Silver has crashed from here to here, right? So did you see, upper Bollinger Band hitting 23.6 here? If it had gone long at this candle, so this is where the silver is hitting 23.6, right? Upper Bollinger Band hitting 23.6. If it had gone long at this candle, it just hit 38.2 dot. Clear? Even now, it is hitting 23.6, right? Second time. Correct? Upper Bollinger Band is hitting 23.6. This is the low. Just see, the stop loss is not even, 10-15 points for gold. From here, it just went up by almost, 11.44 to 23.6. Now we need to look for the breakout confirmation. Now it has made a low, higher low, higher low, higher low, right? So now if upper Bollinger Band goes up, price goes up, lower Bollinger Band comes down, most probably it's a breakout from here. It can make 38.2 and 50. Clear? So you're able to see 23.6, right? Dot. After this hitting, your stop loss is, lower Bollinger Band. It actually, from here, it didn't even come down by 10-15 points, right? Even here it didn't come. From here it just shot to 38.2, which is a big money.
Yeah, Mr. Charan has raised his hand. I'll just unmute you. Please hold on.
Yeah.
Before that, I'll just put across a question to Mr. Guru. One more, couple of more questions in YouTube. Where to get TR and ATR value? How to use TR and ATR with Bollinger Bands? Please show an example.
TR, if you go to tradingview.com, you'll have, TR indicator also. So,
Mr. Charan, you can ask your question. You have been unmuted.
average true range, if you put, okay, you'll get the average true range here, right? So, now we are having this is a breakout, right? At this place, the breakout, correct? First thing is, what is the ATR here? 172, right? What is the next ATR? TR 175, right? It has gone up from 172. The ATR has gone up, right? The previous candle 172, correct? ATR is 172. Now the breakout is happening. What is the condition? Price going up, upper Bollinger going up, middle Bollinger going up, lower Bollinger coming down, right? Now TR should be greater than ATR. That means it should be more than 172. What is the next candle? 175, right? So the TR has increased. From 172 it has increased to 175. First condition TR greater than ATR, price going up, upper Bollinger goes up, middle Bollinger goes up, lower Bollinger comes down. It's a very big breakout, right? Hello?
Yeah.
Yeah. So in investing.com or tradingview.com, if you go to the indicators, you will get ATR, which is average true range. Once you put ATR, you'll get TR also, right? Then you can trade. Hope that clarifies.
Yeah. Mr. Charan, you can ask your question now.
Yes, sir. So it was basically the same TR greater than ATR. Where do we notice this? I have actually three questions. The first one being TR greater than ATR. Where do we notice this?
Little louder, please. Mr. Charan, little louder.
Yes, sir. TR greater than ATR. Where do we notice? Where is TR here in this investing.com that you are not showing, sir?
TR is not true range. That will not be available. You are seeing 172 as ATR, right?
Yes.
How will the ATR increase?
By the values that you just showed. Yes.
No, only when the TR increases, ATR will increase, right?
Okay, fine.
Without TR increasing, if the ATR is 172, next consecutive 14 candles are only 150, 140, then ATR will come down, right?
Right.
For the ATR to increase, the TR should increase.
Right.
Okay, that's the idea.
But sir, when we are noticing the fall in the ATR, the price is still going up.
When the
Right. If we go further to the right side, the ATR falling and the price is still
that is
rising
okay.
up.
While entering, say, to open a door, you need a push.
Okay.
Yeah.
Yeah,
After that, the ATR TR coming down is is a boon. For which there's a thumb rule. Okay. At the turning points, VIX is at the highest. Okay.
Right.
At the turning points,
Yes.
VIX is at the highest.
Yes.
Okay. When the new trend emerges, VIX cools down.
Right.
ATR cools down, right? So
Right.
here it's a new trend. It's a turning point. So the ATR VIX increases. Okay.
Yes.
As the fresh trend emerges, VIX cools down, IV cools down, then it further goes up, right? That is the basic thumb rule. Yeah.
Yeah. The other question that I had to ask was, can I continue, sir?
Yeah. Your question will answer many other people's doubts.
Yes, sir. Sir, we talked about entry at the 23.6 in alpha stocks. Now, where is the exit, sir? I mean, can we be seeing the exit by any other means, or so should we take only the Fibonacci exit? How do we do the exit straight? Exit the position.
What I do is, I create a hedge strategy. I have a strategy called golden butterfly. I have a strategy called always on. These kind of strategies I have. Okay. whatever this is, I'm always fearful of losing money. So what I do is Hindustan Lever gave a sell call at 2200, okay, in February, March. Okay, it hit 23.6. I sold at 2200. I bought 2150 call. Bought 2150 call. Okay. So I'm not bothered. It crashed to around 1400 odd. That's different. But I exited around 2050 itself. I was having a profit of 100 points, lost 50 points in the 2150 call. Okay.
Right.
So to be safe, short and buy a call, buy and buy a put.
Yeah.
And as I told, there are three kinds of indicators. One is a lagging indicators, which is moving averages, SMA, EMA, DEMA, Bollinger bands, stochastic A, D, RSI. All these are, tell about the past. They are lagging indicators. There are, leading indicators like Andrews pitchfork and, Fibonacci. These tell you where the Nifty can lead you to. Right now, for Nifty, I was posting, 13,452 as a possible level in 2000, in December.
Yes.
13,000, yeah, sorry, 14,352. Today, the close was 13,347. It made 13,460 though. Close was 13,447.
Yes.
So these kind of forecasts you can do with Fibonacci.
Right.
Yeah.
So the last year. So you talked about along with your TR ATR indicator, TR being greater than ATR. You talked about RSI and VWAP. Can we see a demo of can we see a little example of it, sir? I mean, do you really put it into practice? And can we because these are very familiar indicators for us. RSI being the lagging indicator. RSI VWAP.
Actually, that I don't know which name I had saved that file. Just check.
Shall we take the next one?
Just a moment. Let me just, that's a good question he asked actually.
Okay.
And, I really like the choice of words he used also. Okay, I'm not able to get that file. Actually, that is in my another system. So maybe you can note down my email ID and ping me. Maybe we can connect one more time to explain on that. How to add those three things. I go for binary. I get a triggers stating that this has come. All this we say 6/7. Okay, so 6/7 trigger has come. Then we take a trade usually. So we have created an Explorer also. That is in Python. So which is not here. Maybe we can connect next time and train you on that. Yeah.
Sure, sir. Can I have the email if you don't mind? Or
I'll ask him to share it. One more question. Do we also get to know of continuation or we only trade reversals using mean reversion, and how to decode
Continuations or breakouts.
target?
Continuations or breakouts. Reversal or PRZ or mean reversion.
Okay.
Continuations are usually, what do you say, pole and flag and then breakout, right?
Thank you,
Sir,
Guru.
sir.
Yeah.
Yeah.
Yeah. One last question, Saran. Yes.
Sir, can I? There's another Bollinger Band kind of a thing that is going inside on the Tata Power chart, which is in the green shaded.
Okay, what is that?
So one is the real Bollinger Band, which we see in standard deviation 2, and then you have another one which is
Yeah, that's
there
multiple
inside.
time frame analysis, which that's a separate training. So I don't want to confuse with that multiple time frame analysis. Maybe when we can schedule it next time.
Yeah. Sure.
Daily Gongji, where do we take this email address from?
It's mybillioninc@gmail.com.
Sir,
mybillioninc@gmail.com.
I think can it be written in the chat box, sir, please?
Yeah. Sure. I'll ask him to share it
In the chat box.
Yeah. So I think we have covered many questions. Thank you, Mr. Guru, for the wonderful presentation, and also taking your time to discuss so many important things, and being kind enough to take so many questions in spite of the limited time we had, and other constraints. So anyway, you can share the your email ID on the screen, so that people who want to get in touch with you can always contact
People can
you.
note on my email ID, which is mybillioninc@gmail.com. I hope people have noted down.
For others,
mybillioninc@gmail.com. Okay, my website is mybillion.in. I have got many courses, so people can check your thing. It is mybillion.in.
otherwise you can always connect with Daily Gong. So we will put you through to Mr. Guru for further assistance.
By the way, I am part of Daily Gang also. so this is my website.
Yes. So thank you, Mr. Guru, for the
Thank
wonderful
you.
presentation.
Hope people had invested their time, not spent their time. I was able to add value to you.
Definitely yes. This will be definitely be considered as investment by them. So thank you once again for all the participants who made it a lively interactive session. I hope to connect with Mr. Guru a few more times in the days to come.
Sure.
And more sessions of learning for all of you. Thank you very much.
Yeah. Take care. Good day. Bye.